Now, we put together a taking stock think tank on job creation and also on the economy to get some differing perspectives. Charles Ortel, managing director, Newport Value Partners. He was among those who had recognized the credit market collapse early on. Chris Rupkey is the chief economist at Bank of Tokyo-Mitsubishi. And also with us, Darrell West. He's the vice president of governance studies at the Brookings Institution. Gentlemen, welcome. Charles Ortel, I want to begin with you because when I read the notes for your appearance here, they started off with some good thoughts. You were optimistic about some parts of the U.S. economy. I had to read it twice to make sure it was really from you. What are some of the optimistic things that are going on in the economy right now?
Well, I think the optimism comes after we get through the next test. I think our economy, contrasted with Japan and with Europe and with some of the other major economies, is a lot better primed to deal with emerging from the wrenching restructuring that I think Nouriel Roubini is correct to point out is right in front of us. We have a large integrated economy. We have a common system of law. We have a reasonable legal tradition. And we actually could absorb a lot of immigrants, and we have a lot of assets. In contrast, Europe is in a different place. Japan is in a different place. But in the short term, and I mean it could be within 24 hours to a week to a month, I think we're back looking at crisis 2.0 again. After we get through that, we're going to come out with a roar.
Chris Rupkey, before we get to crisis 2.0, do you agree with Charles that relative to other major economies in the world, that the United States is in pretty decent shape, at least when it comes to facing the problems?
Yeah, but don't forget, we lost a lot more jobs in this recession than other countries like Germany, Europe. Their unemployment didn't go nearly as high as the U.S. So we have a bigger output gap and a bigger hole, to fill in, if you will. But, I'm pretty optimistic. We lost 8.8 million jobs, and we've created 2 million back. This is how it comes back every time. It takes a number of years.
Darrell West, when you look at what the government is doing, can it really or should it really do more to prime the job markets?
There's limits to what the government can do right now because it's going to be very difficult to get any significant legislation through Congress. And I think that's one of the reasons President Obama is now emphasizing restoring business confidence so that companies will invest and hire workers, and that he also is talking about leveraging private sector resources.
My guests for our Taking Stock think tank are Charles Ortel, Newport Value Partners, Chris Rupkey, chief economist for Bank of Tokyo-Mitsubishi, and we have Darrell West from the Brookings Institution. Darrell West, we're talking about what the government can and cannot do, at least in the future, to get the economy moving, particularly when it comes to jobs. When QE2 ends, when the Federal Reserve stops its purchase of treasuries and government securities, do you think the government ought to just rest and see what happens?
Well, in all likelihood, that is what the government is going to do. Obama's big challenge is that companies are sitting on billions of dollars in cash. And what he's trying to do is to get them to invest in the American economy so they can create jobs and lower that national rate of unemployment. If he can do that, if he can restore confidence to free up those billions, then the unemployment rate is going to come down.
Chris Rupkey, what kind of job creation do we need? What kind of numbers do we need in order to get back to some semblance of normal?
Well, it's probably 200,000 per month. That's why it's a little, I'm a little uncertain. I think the unemployment rate going to 9.1% caused Obama and his people at the White House to see what could they do. It was a very public number, but realistically, we did create 83,000 private jobs in May. And in the 3 months ending April, we created 750,000 jobs. That's a faster 3-month pace than any time during the housing bubble. So there may be a slowdown in the economy here, but 83,000 is still 83,000. We don't know what's going to lie directly ahead.
Charles Ortel, part of the job picture is that state and local governments have not been hiring. In fact, they've been shedding workers. So is it possible that the private sector will be able to take over from the public sector when QE2 ends and indeed as we go into an election cycle?
I think it's highly unlikely. I think the elephant and the donkey in the room is that since 1999, the U.S. dollar has gotten smoked against most currencies and against most major currencies and against gold and other precious metals. And what we see now is a brewing lack of confidence that any politician in any party can do now anything soon to rewrite the problem that we have. Quite simply, we have way too much debt on the U.S. economy. Investors around the world have been willing to advance sums on terms that are not realistic to this country's credit risk, as Bill Gross, the world's largest investor, correctly perceives. And until we change that, and that has to be changed with rather out-of-the-box solutions, I don't really see any tinkering in Washington, D.C. or in state capitals changing the basic risk-return calculation to put capital inside this country, to keep capital inside this company, and therefore to create private sector jobs.
Darrell West, this idea of keeping capital inside this country and getting U.S. corporations to pony up and hire U.S. workers, are we just in the grip of something that is a secular change, low-cost wages overseas trumping the U.S. economy?
It is a secular change. Globalization certainly has changed the nature of the job market, and it's been difficult to get those private companies to reinvest in the United States. So the president has put together this team of high-powered CEOs. They're talking this issue up among their colleagues, and that really is the president's best hope, relying on the private sector to invest those billions of dollars in the American economy.
Chris Rupkey, when we talk about the private sector in the United States, it also means the consumer. And what has happened to the consumer and their ability to buy the goods and purchase the services that keep the economic engine chugging? Are we just going to have to get used to lower consumer spending on certain things?
I don't think so. In the fourth quarter, consumers were spending like there was no tomorrow, 4% annual rate. 3 to 4% is normal. We're down at 2.2 now. It's probably not going to be a good number tomorrow, but we already know auto sales have come off.
Right, the retail sales numbers, that's what you're referring to.
I think the problem here is that it's not always what you and I are going to spend. It's also, we created 750,000 new consumers in the 3 months ending April. They all have paychecks. They will power the economy going forward.
I'm glad Chris Rupkey talked about paychecks, Charles Ortel. What about tax policy? We've got a 2 percentage point payroll tax holiday that expires at the end of this year. Is it possible that the administration could do something to the tax regime in the U.S. that would help the economy?
Absolutely. I think one idea, which is admittedly radical, would be to lower the corporate income tax rate to 10%, make it less than the tax havens, many of the tax havens, encourage multinational companies such as GE to therefore repatriate their money into this country, and then in the personal area, go to a simplified tax code. I think if you did that, changing the deductions, lowering the rates, and also offering people some certainty that this might happen for, say, 8 or 10 or 12 years, I think you'd see a lot of capital coming back into this country, and that would restore confidence more quickly than all these very complex pieces of legislation which are actually adding raising tax rates.
Darrell West, what do you think about Charles Ortel's notion about tax changes?
I think many of those tax changes would create jobs and would certainly boost the economy. The problem is getting anything through Congress at this point. It's unlikely the Republican House is going to give Obama anything new on economic policy. And so, we're going to be in this election season before you know it.
Chris Rupkey, last point to you. You're not ready to throw in the towel in terms of the recovery, are you?
No, not yet. I mean, we had a bit of a bobble here. Gasoline prices went up to $4, or back down about 20, 25 cents. The things that caused us to slow are reversing a little. I'm still optimistic about the second half of the year.
Do we have just a lot of one-time elements, whether it's an earthquake in Japan?
I would say this recovery is the most fragile one I've ever seen. I don't know, blame it on the internet, blogs, everyone's communicating with each other. We slow down at almost every little thing.
All right. Well, I want to thank you, gentlemen, for communicating with us. Chris Rupkey, Bank of Tokyo-Mitsubishi, Charles Ortel, Newport Value Partners, and Darrell West joining us from the Brookings Institute.